Yes, we are back. We've seemed to have got a solution to that. Now, Tommy, the question that I asked you just before we got the technical hitch with was whether anybody looking at this new headlines, this strategic investment announcement that we're waiting from Tuskys, do you think that these cases are going to put off this strategic investor?
I don't think so. If they have a solid plan
Yes.
that can be backed up well, that is feasible, financially feasible and profitable to the investor,
Yes.
I don't think they will back out of it. So as much as it looks dire for them, they still have a lot of hope.
Yes, but Tommy, let me ask you a question though, because now if you are talking about investment, this is number one, a retail chain that is navigating a 45-day liquidation threat. Now these days keep on counting down the line. And now, if you have all these cases really, and you are getting some of your chains taken off, is it not a potential put off for an investor, Tommy, really?
It may be, but this is short term. If you're an investor coming into Tuskys, you're looking at the long-term benefit of it.
Yes.
So within that 45 days, the restructuring and the business plan that they can come up with will help the investor decide whether this is worth their investment or not. As much as, yes, these branches are being closed left, right, and center.
Yes.
But also that 45-day ruling has given them time to negotiate. And like they say that they're going to get this influx of 2.1 billion. So somebody is interested in investing in them.
Pretty much. Now, just as we clear this conversation for Tuskys, yes, do you think that by what is going right now, because Southfield Mall are one of those biggest malls that they have that will sort of stamp their market share in the country, do you think they're still the biggest retail chain?
At this point, it's going to be hard to tell.
Yes.
Because we need this 45 days. We need to see that plan after the 45 days, because maybe part of that negotiation is with the mall as well.
Yes. Pretty much. All right, Tommy, if you may allow me, let's move on to the next issue this morning, where the National Treasury has been forced to review the government's spending for this financial year, revising the figures upwards to a tune of 128 billion shillings. Now, the Finance Office announced that the COVID-19 pandemic has forced it to increase its total financing from an earlier plan of 841 billion in the budget to 1.018 trillion. This will now force the government to seek 600 billion shillings in domestic financing, up from the 494 billion that have been planned for. Next, external financing has been already increased from 346.8 billion to 401.8 billion. Now, the government is already running into revenue shortfalls in the fourth quarter of the financial year 2019-2020, was largely due to the severe disruptions of the economic activities from the containment measures put in place to contain the spread of the COVID-19 pandemic. Fine. So let's look at what our domestic debt, therefore, is in regard to this, because that pretty much means that we're going to increase our borrowing as well. And there's that upward trajectory that we're seeing all the way from 2015 up to where we are right now. Tell me, what does increased domestic borrowing mean for the economy, therefore?
The benefit to the taxpayer is that this money is not leaving the country. It's being borrowed within the country. But the disadvantage of the economy is that it's going to lessen the money available out there for other investors to borrow.
Pretty much, but does it not also stifle what could be used locally by what I would like to call the even businesses that need that money right now? Because if the government is competing with the rest of the economy for borrowing, is that going to get us into adverse effects where we don't have money to even run our businesses, Tommy?
That is correct. That's what I was saying. I was saying that since the government will hoover up all the money that's in the economy, there'll be less left for local businesses to be able to borrow and to conduct business. So that's the downside of this. But at least for the taxpayer, since it's not foreign, it'll be less, it'll cost less interest on it, and it won't be money that is leaving the country.
Somebody's going to ask you, Tommy, on exactly what it means for the government's plan, because we're talking about this new headline when we do know that we did officially cross the 7 trillion mark in terms of our debt. Are we talking about blowing off that 9 tree even before 2022?
Yes, unfortunately, this is not the time not to spend money. We need to spend money to keep our economy going. It's not a time for austerity. And the Jubilee administration has its agendas that it needs to put in place and fulfill promises before its term is up. And this is what has caused spending to go up high. The Big Four agenda is still in progress. And slowly as the economy is recovering and with COVID going on, more spending means we have a better chance of growing our economy.
Which therefore begs the question, Tommy. I mean, if we are increasing our borrowing just because we don't have money locally from the tax man, is it not time for us to relax some of the measures that we've put in place to cushion the economy from this effects of the coronavirus pandemic, just to fill in that deficit instead of borrowing?
From an economic perspective, that sounds good, but governments don't tend to do that. They have projects that they've committed to, so they will. It's highly unlikely that the government is going to cut back on its projects at this very point in time.
Pretty much. Tommy Randall, thank you very much for taking your time this morning to speak to us. Quite invaluable.
Okay.
We take a short break here on Business AM. Once we come back, more on what we have prepared for you.